Hello, my name is Ian Hawkins. I'm the head of content here at Swoop. Delighted to be joined today by Rhys, who is the head of unsecured loans and asset finance. Rhys, great to have you with us.
Hi, Ian.
I think what I should do is I should timestamp this recording as the 4th of October, and just because things might well change. But the question for you is, what's happening to interest rates right now?
Well, ultimately, Ian, we're seeing them rise. Now, it's nothing to be overly concerned about because we've been much higher over the last kind of 20 to 30 years. So during kind of COVID, on the March 2020, interest rates were around about, well, they were at 0.10. And since then, we've seen a dramatic increase over the last kind of 6 to 12 months. So what has happened is with interest rates rising, they've effectively they rise gradually. So from December 21, we've seen an increase of 0.25 again in February, March, May, right the way up until June. Now, it's not until August we've seen a rise of 0.50, which was putting the interest rate of what's known as base rate at 1.75. Since then, we've seen another hike of 0.5. So we're currently, as of today, at 2.25%. Now, what is base rate? Now, base rate is decided by the Bank of England's Monetary Policy Committee, also known as the MPC. And usually this happens, or a review happens 8 times a year. So what we have seen is, a gradual increase in these interest rates.
Yeah, I mean, that is my next question. Why is it happening right now?
It's ultimately due to the Office of National Statistics, and they publish a report which is known as the Consumer Price Index. And what this is a basket of goods. And it's the same basket of goods, hundreds of goods or products that are in the UK that are seeing an increase of the cost of them. What we are seeing is because inflation's increasing, the government need to or the Bank of England need to control this. So by doing this, they increase the interest rates to kind of mitigate the increase in inflation. Why is inflation increased? It's ultimately due to economic contribution factors such as what's happening in Russia, the rise in energy bills, fuel prices, obviously food prices, and ultimately the cost of raw material goods. Now, it's not all doom and gloom. We're not the only country experiencing kind of inflation at this rate.
Sure. And I think we've all felt the prices of things go up in our daily shopping. But what does this mean? This change in interest rates, what does that actually mean for small businesses?
It ultimately depends, Ian. I mean, it depends what type of business you are and what lending facilities you currently have. If you've got current lending facilities, they'll either be on a variable rate or a fixed rate. Now, a variable rate will track the LIBOR rate or also the Bank of England rate. So ultimately, they should start to see the monthly repayments or facility repayments increase. If a business is on a fixed rate, then they should remain the same for the duration of the period, whether that's 12 months, 24, etc. However long the duration is of that period. Now, what this means to new borrowing or refinance of borrowing is typically if you'd taken a loan maybe 2 years ago, you would see a hike in interest rates following the base rate. If you haven't previously borrowed or you're a first-time borrower and you're looking to borrow, then you will see a higher rate than you would have seen potentially 2 years ago, typically, hypothetically. That's not in all cases. We are seeing across the business lower rates than they were or let's say during the pandemic and pre-pandemic, depending on the business. It is very much dependent on the business criteria, and what lender essentially is open for business at that point for that type of business and the underwriting criteria. But ultimately, what we are seeing is the increase of new facilities happening, and my gut feeling is these are going to increase from many news articles, kind of research, analysis, etc. of the market as well. So it might be a good time to kind of fix interest rates if you have got any kind of plans moving forward.
Okay, I mean, the big question is, are there still deals out there, or is borrowing
Definitely.
completely off the table? Okay.
No. So we haven't seen many lenders exit the market. Many lenders are following base rates. So as base rates increases, as will kind of the interest rates increase as well. But from what we've got a great relationship with our panel of lenders, and we're very much open for business, as are the lenders within the UK.
What can I do if I'm a small business? I need funding. What can I do to mitigate some of these changes that are out there in the world?
It's all about looking at the sustainability of your cash flow. So when I was in a bank, we were always told cash is king for any business. As long as you have cash to pay wages on a Friday, etc., your business should perform. The one thing to always look at is making sure that the sustainability of what any debt that you take is affordable. And at Swoop, we actually help all of our businesses that we deal with in terms of the looking at the forward advance of lending to them. So what impact is this going to have on cash flow, i.e. the monthly repayments, etc., and is it sustainable for not only the 6-month period, 12 months, 24, for the duration of the period. So it's more making sure that if you have got any capex plans in place, make sure that you're speaking with the likes of Swoop or another broker in the market, let's say, or a marketplace, to make sure that we are giving you best autonomy of the market. Many lenders only have one policy. We at Swoop, we have autonomy for pretty much the majority of lenders in the UK that are lending at the moment. So we can guide any business to new funding or refinance of the funding, ensuring that we're providing them with the best possible deal within the market at that period.
I know that one of the things that Andrea Reynolds, our founder, is very fond of saying is that it's better to check what you can borrow before you need to borrow it. Is that still the case?
100%, definitely. I think Andrea's right there. Well, she is right in terms of knowing what's out there. Many businesses come up with opportunities that potentially are presented to them unexpectedly. It could be a new contract, and many owners may not know actually that they may be eligible for funds. So if there are business owners out there which would like a chat, would like to kind of sign up to Swoop, have a look at what's available, our marketplace is a great indication in terms of what funding is available for any given business at any given time.
Awesome. Rhys Cunnah, that's incredibly helpful. Thanks for your time today.
Thanks, Ian.
So if you're interested in getting your business funded across equity, borrowing, or grants, swooppfunding.com is the place to check us out. I'm Ian Hawkins. Thanks for watching.